Hello and a warm welcome to this analysis. Now, today's talk covered is Ultratech Cement, the flagship company of Kumar Mangalam Birla. It is India's largest cement manufacturer and the third largest in the world. The only company outside China to have a capacity of more than 100 plus million tons. Apart from India, it has plants in UAE, Bahrain, and Sri Lanka with sales evenly spread across all its plant. The company is focusing on green power for its operation, has a very low debt with profit margin increasing on quarter on quarter. However, in the last 3 years, their company has seen a declining net cash flow. The market cap of the company is at 3 lakh 2,068 crores with a return of equity of 12.3%, a healthy dividend payout of 21.8% with a trailing 12-month PEG ratio at 1.1 and a high Piotrowski score of 8. The promoter holding at 59.96%, FII 17.74, domestic institutions 14.14, and the public a very low 7.92%. Now let's have a look at the charts and try to decode what lies ahead for Ultratech Cement. Now Ultratech Cement in the quarterly charts, as you can see from where the data is, July 2004 is had seen a double bottom, in 2008. Now, those who are not aware about the history of Ultratech Cement was bought. The stake of the company was bought by the Birla family, Kumar Mangalam, from the Dhirubhai Ambani. Dhirubhai Ambani was a major stakeholder, which was originally a part of Larsen and Toubro. So the company, which was Larsen and Toubro, had tried to block all hostile takeovers from the Reliance Group, the Ambani Group, which later went on to sell it to Kumar Mangalam Birla, who then the company got demerged from the Larsen and Toubro, and it became Ultratech Cement from then onwards. Now, Ultratech Cement in the quarterly chart, we can see that the Ichimoku baseline has been only tested twice, once in 2020 and then once again in 2022, suggesting that very from an in a long-term investor, any panic correction in the stock has just taken place twice in a span of more than almost now 2 decades of listing of the company. And let's try to analyze what kind of retracement did we see in the stock, uh, compared to its prior term rallies. And here we can see that the first one was almost 50%. Yeah, 50%. And the next one, in this case, from the COVID low till the 2 year spike rally, and then another move down, was again 50%. So each major correction in the stock in the long term is 50%, but then we see tremendous rallies from the lows of COVID lows of 3,000 rally to 8, and then again from the 2022 lows of 5,000 we've doubled. It's gone double from there. So each big rally has led to a more solid expansion in the stock, and fantastically supporting its Ichimoku baseline. The quarterly chart is suggesting a support around 7,500. That's a huge long term support line we are looking at. Let's look at the monthly. In the monthly, also, we can see a candle formation after the December monthly candle has gone, much smaller. We don't see a large body formation happening in it since then, this entire 2024. However, support for the monthly chart at 8,500 now. Let's look at the weekly charts. In the weekly chart, we can see a trend line breakout more prominently clear in the daily time frame. And this week's candle, in the weekly is because of the election results and reaction of exit poll and result has been extremely volatile. So the candle stands out like that, but one should not isolate and just look at this candle. Look at the bigger picture. And here in the monthly stock, in the weekly, the stock trying to push its way above its all-time high from here, which is also a Fibonacci extension resistance of 10,400, with now support in the weekly at 9,800, the Ichimoku baseline, and below that the cloud at 9,500, the Ichimoku cloud at these two levels for the stock. Let's have a look at the daily. In the daily, yes, as like you can see this prominent trend line made from January finally breaking out in May, a pullback of that again going up, breakout again, a sharp pullback this week, again election reaction, and then again superb candle on Friday, large candle formation taking place, a stock trying to break above 10,400. Yeah, where is the daily support? The daily support comes in at 10,000, and then at 10,000, at 9,800 odd, the Ichimoku cloud line out here, from where we've seen every time a good bounce taking place in the stock. And as we drawing this line out here, we get more clarity of where the support is coming each time for the stock. Every time the bounce, any pullback is seeing good strong higher low formations taking place in the stock. Now before I go into the hourly of the chart, let's talk about the derivative data. Because of this extreme reaction in the election, but I will not giving so much importance to the future open interest right now, but still nevertheless on Friday, in spite of the stock doing a 3.7% move, it saw 1.24% shedding of open interest in it, which is suggesting a minor short covering. Overall, in the last 5 days, the stock has rallied 4.8% in spite of that sharp deep cut, with a OI short covering of 10.7%. So overall, quite healthy scenario. But because this is the first week of the settlement plus initial reaction, I will not be looking at the OI signal blindly like that. The stock has doesn't have a huge option activity. Nevertheless, 10,500 and 10,000 put, both the put strikes seem to be having the highest OI, while 10,500 call and 11,500 call has the highest OI. On Friday, it's showing a lot of short, what do you call, short covering in calls, and lot of put writing happening in it. But again, I would suggest that the stock is not extremely liquid on options, so one should not get carried away by that data individually. Now let's have a look at the hourly of the chart and try to slice ahead for it. Yeah, hourly we can see, the only fear, it's too early to say, is that it is a double top. That will only be possible if we see a sharp down move below 10,200. Then we would say yes, some possibility of a double top taking place. Otherwise, some consolidation possible below 10,200. The major support coming in at 10,000 for the stock. Now, where is the resistance for the stock? As we can see, and plotted the Fibonacci resistance for you all. So any up move, because it is that trend line breakout out here, any up move would suggest that next major resistance coming in at 11,800 and then 13,700. But that's a long term Fibonacci resistance plotting taking place. So yes, from an investor's angle, the trend line breakout could lead to a lot more on the upside in this case, because if you go to see potentially from the lows of March, the stock hasn't done exceptionally well compared to other stocks. Yes, it's gone given a 1x 1 a equal to c kind of Fibonacci return, but comparatively not done that. And so that's why now let's have a look at what the ratio spread charts are telling us. So first, I'm going to compare this Ultratech with the commodity index, which it is a part of. Now, in the commodity index, you can see that yes, the stock is in a triangle kind of range, and it was underperforming the commodity index, from where now it has started showing a good bounce back out here. As long as the ratio is of the with the index sector index is above 1, we could see a potential to go to 1.25, maybe even try to breach this Ichimoku cloud wall and then push its way up towards 1.4 to 1.45, and then a lot more. So yes, signs of doing well in the commodity index is what Ultratech is now showing to us. It's been a laggard there. Even if you look at its comparison with the Nifty in the relative strength chart, you can see this is the monthly one, and it was making a slanting channel. Still within the slanting channel is, it was doing much better than what you call the Nifty, come the in the Nifty, because of the other sectors, the IT stock taking a battering, and some other stocks here and then not doing that great. So it stood out there, but more or less you can see a channel bounce showing now in Nifty. So while the stock is showing signs of doing better in the sector against the Nifty, in the Nifty 50, the probability of it underperforming the other Nifty stocks looks slightly higher now. If the pair of Nifty against the Ultratech starts pushing its way up from here, then yes. So overall scenario, while the stock can do well uh, against its commodity sector and overall move towards higher levels, the stock could be a not a great outperformer against the other Nifty stocks in the scenario. That does not mean it won't go up. Yes, it can, but in terms of yield, it could be a bit laggard. So overall, above 10,400, I would be looking at much higher levels in the stock. Don't know about the intensity of the speed it will move at because of its pair ratio of the Nifty. While any dip down towards 10,000 or 9,500 would be another opportunity to look at. Yes, but failure to hold 9,500 would suggest that even in the higher time frame of weekly and monthly, that the stock could have made a double top in that scenario and further decline. So crucial levels both sides for the stock at the current moment to look at. uh, for down from in the short to medium term, below 9,500 I would be a bit worried, while above 10,500 stock could continue to do well. I hope this video is of help to you. So please do like it, share it, and do follow me for regular stock updates and ideas. A disclaimer: this is not a trading advice to you at all, or an investing one. This is a video purely on educational basis, based on Ichimoku, Fibonacci, and relative strength studies. So please do your study properly, in detail. Calculate the risk involved in whatever trade or investing decision you do, and always respect the support and resistance levels. Until then, happy investing.